Welcome to the first episode of Live Market Analysis. In this series, I'll break down my real trades exactly as the market moved, so you can understand the thinking behind every decision. This trade was taken on July 10th, 2026 on XAUUSD, using the same smart money concepts strategy that I teach in every single video. There's no new strategy here. The goal is to understand what the market is doing and wait for the right confirmation. Watch the complete video, and at the end, comment yes if you noticed that I used the same strategy I always teach. Now, let's see how this trade developed from the very beginning. Every trade starts with one simple question. What is the market trying to do? Before thinking about any entry, I always find the overall direction first. On this chart, price creates a bearish break of structure. This tells me that sellers have taken control and the market is now favoring the downside. From this point, my thinking completely changes. I'm not looking for buy trades because I want to trade in the same direction as the market. That doesn't mean I sell immediately. First, I let the market continue naturally and watch how price behaves. The next few candles will give us more information, so let's keep following the chart step by step. After the bearish break of structure, something interesting happens. Instead of continuing straight down, price starts moving higher. This is called a retracement. At this point, many traders think the market is becoming bullish and start looking for buy trades. But I don't make that decision so quickly. A retracement after a bearish break of structure is completely normal, so instead of reacting, I stay patient and let price continue moving. I want to see where this retracement takes us before making any trading decision. The next step is to mark my supply zone. This is the area where I'll pay close attention if price comes back. I'm not saying price will definitely react from here, but this is the zone I'll be watching. At this point, price hasn't reached the supply zone yet. I'm simply marking it in advance and letting the market continue naturally. If you've watched my previous videos, you'll already know this strategy because I've explained it in complete detail before. In this video, we're simply using that same strategy in a real live market. Now let's follow the price and see if it comes back to this supply zone. Before looking for an entry, I also mark the sell side liquidity. This is my expected target if the market continues moving in the bearish direction. It sits below the previous lows, where many stop-loss orders are likely resting. I'm not saying price has to reach this level. It's simply the area I'm expecting price to move towards if sellers remain in control. Also, after this video goes live, I'll share this exact live market chart in the community tab. You can save it, study it again, and try analyzing it on your own. It's a great way to test how well you've understood the strategy before watching the next episode. Now that we've marked the supply zone and the sell side liquidity, let's see what price does next. Now price reaches the supply zone. From here, I start watching every candle carefully. Look at this candle. Its wick goes a little above the supply zone. Many beginners think this means the supply zone has failed, but that's not true. A wick moving above the zone is completely normal. I don't decide based on the wick. I look at the candle body. If a candle closes with its body above the supply zone, then I know the zone is no longer valid. But here, only the wick moved above the zone, and the candle body stayed inside, so the supply zone is still valid. And now let's see what price does next. Before price reaches the supply zone, it first creates a liquidity sweep. If you've watched my liquidity sweep video, you'll already know this concept because I explained it in complete detail there. In simple words, a liquidity sweep often forms before price reaches a supply zone or a demand zone. The market moves above a previous high or below a previous low to collect liquidity. When this happens near a supply zone or a demand zone, it can be a strong sign that the market is getting ready to reverse. It doesn't guarantee a reversal, but it gives us a higher probability setup. Here, price sweeps the previous high and then continues towards the supply zone. Now let's see what happens next. Now let's look at the internal liquidity. If you've watched my internal liquidity video, you'll already know this concept, because I explained it in complete detail there. As price was moving towards the supply zone, it didn't move straight up. It made small pullbacks and then continued higher. Those small pullbacks created internal liquidity. These levels become important because they are often the first liquidity levels that price breaks when the market starts changing direction. So, after marking this internal liquidity, let's see if sellers are strong enough to break it. That will give us the next important clue. Now the market gives us the confirmation we've been waiting for. After rejecting from the supply zone, price starts moving down and breaks this recent swing low. This is called a market structure shift. In simple words, it shows that buyers are losing control and sellers are becoming stronger. This is an important confirmation because the market is now changing back in the bearish direction. At this point, I don't rush into the trade. I first let this move complete, and then I look for the best place to take the sell trade. Let's see where that opportunity appears. A few candles later, price breaks the market structure shift with a strong bearish candle. This gives me the confirmation I was waiting for, and this is where I take my sell trade. My stop loss goes above the supply zone. If price moves back above the supply zone, my trade idea is no longer valid, so that's the safest place for my stop loss. My target is the sell side liquidity marked below. But while the trade is running, I'm not only looking at the final target, I'm also watching the internal liquidity levels carefully. As long as price keeps breaking those internal liquidity levels and continues making lower lows, it tells me that sellers are still in control and the bearish move is likely to continue. Now let's see how this trade plays out. After the sell entry, price starts moving lower just as expected. As the market continues to move, it keeps breaking the internal liquidity levels one by one. This tells me that sellers are still in control, so I continue holding the trade according to my plan. A little later, price reaches the sell side liquidity, which was my target from the beginning. This is where I close the trade and take my profit. This trade wasn't about finding a new strategy. It was about following the same smart money concept strategy that I teach in every single video, waiting for the right confirmation and sticking to the plan without rushing. That's what helped this trade reach the target successfully. That's it for episode 1 of Live Market Analysis. I hope this breakdown helped you understand how I use the same SMC strategy in a real market. If you enjoyed this video, leave a like and subscribe so you don't miss the next episode. And don't forget to comment yes if you noticed that I used the same strategy I teach in every single video. I'll also post this live market chart in the community tab so you can analyze it yourself and compare your analysis with mine. Thanks for watching, and I'll see you in the next episode of Live Market Analysis.